So first of all, welcome everyone. Thank you so much for attending today. We had a really good session back in October, which was a very long time ago. Really good feedback. Thank you to the panelists again. We're really excited about this working group. It's an open and independent working group and centered around a number of topics that are very important across the financial services industry at the moment. We're continuing the theme from the last time, focusing more on ecosystem and then bringing in diversity and inclusion in that context. And then the next one, which will be beginning of March, is going to go deeper into the diversity and inclusion and not just have speakers from financial services, but from other industries, because I think there's a lot to learn in terms of the big topics there. So it's really exciting, and thank you for the support. So I'm going to hand over to Mike Robertson, who's kindly offered to moderate. And we've done a fair bit of planning and preparation for this in terms of how we all interact on the topics today. So thank you again for attending. We'll share details of the recording and the outputs as we did last time. So over to you, Mike.
Thank you, Sarah, and thank you everybody that's is attending. We hope to make this as interesting and interactive as we were last time around. The topics are fascinating, aren't they? Ecosystems and looking at the ecosystem of financial services through, in essence, the lenses of trust, partnership, meaningful or other, and competition, not necessarily always healthy, but competition nonetheless. So those are three important lenses for us today to look at this particular subject. And then we're going to move on to diversity inclusion and speak about that, which is such a broad and ongoing topic, really through the lens of data. What is the role of data in this particular instance? How could it be collected? How could it be viewed or showed to people in an environment where society increasingly judges businesses, through the lens of what, trust, partnership, competition, and a variety of aspects. And D&I, diversity and inclusion, is one of those. So we're going to come to that in the second half of this particular panel. When we were preparing for this, I came across a quote by Alvin Toffler. And interestingly, if you think about his book in 1970, Future Shock, 1980, The Third Wave, and then in Power Shift in 1990, this guy's been a futurist for some time and, a very successful businessman, collaborated with his wife Heidi to write his books, actually, interestingly. And his quote was this, and I'll read it to you because it made me think of what we're discussing today. He said that I'll just pull it up, excuse me, I should have had this on my phone, but of course now I haven't. What he said was, the illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. And it made me think really about the companies of the 21st century, because really I was minded to think that the successful companies of the 21st century will be those that can effectively unlearn the old ways and relearn and embrace collaboration, partnership, and inclusivity. So that's really sort of a thought process I think that we're all going through right now, is what is the direction of travel for the future? So we're going to start off this morning by looking at, as we said, financial ecosystems, and we're going to start with the question of trust. And within that framework, Trevor, I believe that you and Robert have looked at the subject as well, and that you have a general thought on it.
Yeah, thanks, Mike. And good morning, good afternoon, good evening, everyone. I know there's people all around the world listening to this and seeing this at the moment. So, yeah, the question that's being raised is trust or lack of trust one of the #1 barriers that's holding back the adoption of RegTech? And it's an interesting question to talk through. I'd like to go through a bit of historic context on it, because I don't think it's entirely justified that it is that lack of trust that's the #1 barrier. I'd like to put it around 4 themes. The theme of trump cards, tax, Excel, and digital transformation. So after the credit crisis, we had a number of new regulations that came in. There were things like MiFID II, Dodd-Frank, Solvency II. And for those of you working in the world of projects, suddenly there was a new trump card, right? If you had a project that was regulatory compliance driven, it became the trump card that project would be approved. Now, that carried on for a number of years. And I remember a number of discussions with company leadership, CEOs and COOs, and they were saying to me, this feels like a bit of a tax, right? Every year I'm getting projects that I have to approve because it is a regulatory obligation. And I can't approve my marketing manager's budget, or I can't approve my head of trading's budget for change because I've got to do these regulatory things. It became a bit like a tax. And what also happened is a lot of those projects got delayed. There were a number of failed projects. There was also delay in regulation. And then that comes to the third theme, which is Excel, Microsoft Excel, one of the greatest development tools on the planet. If you go to any compliance or legal function in a financial services firm, you'll find a plethora of it, because in many cases it becomes the tool of choice to get the things out to the regulator. Which brings us bang up to date to where we are now. I think CEOs, particularly in the last few years, have been talking about digital transformation as the highest priority, meaning a digital engagement with their clients, digitization of process, and also digitization in terms of interfaces with the regulators. So my advice would be that if you're in the RegTech space, you've got to position it as part of a firm's digital transformation to make sure that it gets suitable priority.
Fascinating. Really interesting, actually, because frankly, digital transformation can be both, a buzzword and a really key strategy. And it certainly takes us closer to, I guess, society's input to what is happening in the firm itself. So Robert, looking forward now, based on what Trevor just gave us there, what do you feel then that regulators perhaps, and I know they would perhaps will have a different response given who they are, what they are, but what role, what could regulators, indeed the firm themselves, even vendors or consultants, do to sort of bridge or close those gaps that are there?
Yeah, I mean, first off, hello everybody, and I totally agree with everything Trevor said there. We had a really interesting conversation around this and how trust overlays on that. And in terms of who can do what, I think trust is at least a two-party thing. There's sort of purchaser and the vendor. And so looking at the financial services side, so I'm from a RegTech, so I'm from a small RegTech selling into financial services. From the financial services side, and again, that covers a very broad church of small firms through to massive multinationals. I think there needs to be a movement towards that trust, building on something that Lindsay said last time, was trusting themselves to manage multiple applications. There's been very much a history of let's have as few applications as possible, these sort of monoliths, everything's all very structured and controlled. And to actually trust a little bit more for a decentralized way. The sheer number of SaaS products that people are using is just growing every year. And to allow that to happen, the smaller financial services are much better at this than maybe the large financial services. So from that side, I think from the financial services side, it's being able to trust themselves to manage that number of different vendors and manage the risk that presents. I think from our side, from the vendor side, regardless of size actually, but particularly for the smaller startups, is we've got to deserve that trust. We've got to demonstrate that we can have that trust from the industry. I think that's part of a maturity of the policies and procedures to show that we understand what their views are, what their risks are, that we've covered those off. We've got a product maturity, and that's a whole range of different things from continuity through security and privacy, etc. There's been some fantastic studies around how important trust is and the words the trust economy. And so from on our side as vendors, we've got to show we're deserving of that trust. Because if you think it's a bit like selling into government, to think that tiny firms can sell to massive multinational financial services, no one would have thought that for another sector really before. But with RegTech, we're asking these massive multinationals to deal with very small companies. So it's a very big change. And trust can be a driver of that, displayed by both parties.
Absolutely, especially when one considers that the trust and the risk factors go hand in hand when you think about the size of organization, don't they? I mean, I know just from personal
Yes.
experience, when those decisions are taken, that one of the risk factors is indeed size. How do smaller firms cope with that, do you feel?
So, for example, I mean, we're very delighted to have some various different awards that we've got, and those sort of things will give like a third, if they're respected awards that have got good judging panels, that will give a level of third-party verification. Case studies from other customers in the industry. We've had customers very happily be reference customers for competitors, actually, because competitors later on was quite interesting. So a competitor went to meet another competitor and talk about our product with them, because that part of it wasn't direct competition for them. So we were very delighted they did that. But often what suppliers do is that you start with the smaller firms and go up the size and build out that trust and those case studies and the awareness of the industry. Obviously, some other providers will come in from the other end and come in for the very large size straight off. And they tend to do that with the leverage of other big names behind them vouching for them.
Interesting. There's a comment here from one of the attendees, Dr. Christopher Parker, talking about open standards and interoperability. And I think that goes some way to those, to speaking to those lenses, doesn't it?
Yeah, Trevor, do you want to take that one? Because you've got lots of experience implementing RegTech from a large institution, and that's probably one more for you.
Yeah, I think the lessons to this are in the open banking world, aren't they? Because with those standards that came to play, it suddenly meant that many of these challenger banks could get off the ground very quickly and build a good client base. And I think the same is very true if you want real partnerships working across the industry, then you need those open standards and partnerships that allow that interoperability to happen.
Absolutely, and that's a great segue actually to the second part of this, which is of course partnerships. Meaningful, hopefully, or otherwise. I mean, we've all been in situations where partnerships have perhaps had less meaning than we hoped they would. And dealing with this particular topic for us is Lucy and Victoria. Lucy, under that particular heading, partnership models really want to achieve genuine two-way value, don't they? Would you speak to a little bit about your experience in this sphere?
Yeah, I mean, yeah, you want me to just talk about the sort of meaningful partnership piece now?
Would you mind?
Yeah, cool. So, yeah, I mean, I come from a broad background, not necessarily in financial services. So for me, I look at the whole of business, and I'm looking at partnerships wherever you are, whether it's in your personal life or whether it's in the corporate space. These are totally relevant. And I suppose in the years that I've seen in business, all the partnerships I've experienced, the ones that haven't worked, and there are a couple in my career that were big ones that didn't work, massive acquisitions that two businesses, big businesses came together and they didn't work, and it was an absolute disaster. And this was all because there wasn't a cultural match. The two businesses coming together, merging, just weren't a cultural match. So commercially, they look great, but actually, when it came to the people, the behaviors, the culture, the values, they were just at opposite ends of the spectrum. And there are three pieces for me within this about it. It's all about the people and the culture. So they are the coming together of people, and the emphasis has to be on, first and foremost, the chemistry. Do I like this person? My test is what I call the barbecue test. And the question I ask is, would I invite these people to my house for a barbecue on a Saturday? And do I want to hang out with them? And, how can I find a way to hang out with them? So I'm not interested in football, for example, but if there's someone I actually quite like, there's a chemistry, and it takes 6 seconds for people to know whether there's a connection, I damn well better find out about football and ask them questions about football. And they hopefully will find out about, I don't know, some of the things I'm interested in, to really see whether there's a fit and to understand each other. The second most important piece, in my view, is why why are we in partnership? What's the purpose of this partnership? So the why is really important. And what is the synergy that brings us together? So as Stephen Covey would say, what's the win-win in this partnership that is for both of us or for all of us, if it's a corporate business or a team? And finally, the other key piece is you have to be prepared to take the time to get to know each other, to get to know the business, to get to know individuals in the team or the other person across the table, outside of the commercial, the transactional space. What is it we're doing, the contract, to develop the relationship and discuss the benefits as well as the fears. And certainly it's not very British, is it, to talk about, what are our fears? What are we worried about? What is it we don't like? What is it that could go wrong in this relationship? But it's really important to get that on the table and talk about it. Yeah, the benefits of this, great, fantastic, and agree on those benefits. But what are we worried about in this relationship? What are our fears that could go wrong? And put those on the table, make it part of the official discussion that you have in the early days and as you're building and developing the partnership. So I'm going to hand over now to Victoria, who I know, is from, the financial sector and has a way of sort of building on this, and we'll have a slightly different perspective, but we'll hopefully build on that. Over to you.
Thank you. Yeah, thank you, Lucy, and good morning, good afternoon, I guess, to you guys. It's 10 o'clock in the evening here. I'm in Singapore, so it's quite an interesting chat we have about this topic with Lucy. Yesterday, I was telling her my perspective is quite different. I work for a huge bank, and the way we look at it is you have to look at it from a high level way first. You have to see if the organization fit, if the resourcing fit, if the culture fit, if the strategy fit, right? At the end of the day, when you do digital transformation, you're seeing partnerships that are not going to be partnership you would envision or imagine in the past. These are like two different businesses coming together because they have one common goal, and they're addressing the same pain points, or they have sort of like lateral synergies in coming together. So in my job, when I develop partnerships, it's not also all about the chemistry. It's not also all about judging, not really judging, but looking at the person, whether I'll invite this to a barbecue. From our perspective, it's a lot more on the table. It's a lot more criteria to tick the box. And then having been in a regulated space, and we're a very heavily regulated institution, we have also limitations and challenges in terms of integration. So we go through quite a lot of testing and quite a lot of pilots before we onboard certain partners. So here in Singapore, they're very much encouraging of developing ecosystem. That means that the government itself is actually the leader in developing that ecosystem. So they bring together normally people that are competitors or would normally not come together to the table to address pain points. So that actually helps quite a bit when you have a very progressive regulator, and you have a regulator who's very involved in the journey of what you're trying to do. So I'll stop there.
Absolutely fascinating from both of you, and very different perspectives on the same topic, which frankly I think we all would enjoy. I guess my follow-up question to you both really is one to do with needs over desire. Frankly, in my opinion and my experience working within the bank I'm at, often partnerships are driven by a need that the firm has rather than the desire within the individual teams to do something. We all have come across the, build it ourselves versus collaborate or go outside the firm to do something. In your experiences, what sort of role, or how have you seen the challenges that exist culturally within firms when the firm really needs a solution that they don't necessarily want to do, but are forced to do it for whatever reason?
Do you want to comment on that, Victoria? You're on mute.
So, sorry, that was an interesting question I was trying to say, because the way we look at it, it's not as clear cut as this is what I need and this is what I desire. You have to we bucket it into several horizons, we call it, like horizon 0, 1, 2, 3. So there is the core bank, there's the core business need. You have a core requirement or need to make sure that you automate, you digitalize, you sort of go with how your market is moving. But then you also have a desire that you know that your business is going to be disrupted at some point in time, and that things will be changing in terms of how, for example, banking is going to be done in the future. So you have to that's why for us, we have both teams in our bank. We have the team that looks at the transformation and the digitalization of the core business, and we have a team that looks at quite a long dated, a long vision of what we might be. So if we feel that we will be a technical company instead of a bank in 5 years, then we work towards that goal, the long horizon team, and they try to look at startups or fintechs out there that we can partner with to either co-create or collaborate. So it's no longer like a clear cut, this is my need and this is my desire. You have to now mix both, because you see the disruption is very fast, and it's also you have to be fast in also accelerating whatever it is that you need to do for your business.
Very interesting. And that kind of takes us to this third element of competition, really. Again, a neat segue to that, because what I'm hearing there is competition within that thought process. Lucy, before I do that, is there anything you'd like to do to conclude there?
In a way, I'd very much support what Victoria was saying, and it seems like there's a difference between needs and wants, and maybe there is a difference between needs and wants. But for me, the key is to reconcile those, get those on the table, get really clear, what do I want from this partnership? To make it, what do I want commercially and culturally? What do I want? What does the team want? What does this business want? Whatever level we're at. And also then just to put, what are the needs? It's usually a commercial need. It sometimes is a personal need, but most instances it's right, there's profit, or there's a specific need for the customer here that we've got to achieve. And sometimes it's having that discussion to unite on that. And it's when you don't unite on those needs and wants that you get the conflict, in my view. So it's coming together, shutting yourself in a room, having the discussion, and really getting to one context, which is what we can all do together. And that's where the unifying, meaningful partnerships can really then start skyrocketing up that mountain that you got behind you, Mike, and make it happen.
Indeed, help dues. And that's fantastic, because really, I think that often one might argue that competition is what drives the need for that partnership. We can't all do it ourselves. And we get together and we work through that process of, liking or respecting somebody or firms to work with them. So that takes us interestingly to competition, hopefully healthy competition. And Damien, we're going to come to you just to speak to this initially. I think the general perception in the marketplace is that competition is a good thing. Certainly in the capitalistic economy, there's very few who disagree with that. And ultimately, ecosystems thrive, because of them. What are your general thoughts on this particular topic, healthy competition in the financial ecosystem?
Well, Mike, I think, we hear a lot about healthy competition, but really interested in the last questionnaire that was put to the panelists and to the people listening. Only 3% of people thought, a very small amount of people thought that healthy competition was vital. It was more around trust and partnerships. So for me, healthy competition is a term that we've all become accustomed to. It's bandied around from a very young age, and everyone nods when asked if it's such a good thing. The question when looking at ecosystems, though, now between big incumbents and fintechs, is it really healthy competition? Or is it symbiotic relationships in which one partner benefits and the other partner is not affected? And just to move that out a little bit more, it's really interesting if you take financial services, the customer, the end customer that we all want to get to and serve, when they look at who they have their relationship with, they have it possibly with a big incumbent. And the big incumbent carries and holds a lot of that risk in the customer's minds. So therefore, when it comes to a relationship with a fintech or a regtech, how realistic is it that you'll get healthy competition? Because the big bank or the big incumbent has a need And in the past, I think they've been in the mindset of, we can't do this ourselves because we can't move at speed, we need external views. But I think COVID's changed that. The percentage of big incumbents who've been able to move very, very quickly to get everybody working from home, to get technology working for customers, is there going to be a mindset change that actually we've done all of this when our backs were against the wall? So now how healthy is the competition? Will it be coming together and supporting each other? Or will it be, actually, I can do this stuff myself? Why do I really need you? And I think for fintechs and regtechs, that's something that's going to be on the table like it's never been there before. And how will that create healthy competition?
Indeed, indeed. And that's fascinating too, ultimately. As you say, COVID has certainly put into stark relief a number of areas in financial services that have needed to be reimagined, if you will. And in essence, this competition point is fascinating ultimately, because one might argue, wouldn't you, Lindsay, that competition is always healthy in an ecosystem, but it isn't necessarily to the benefit of the individual entity that's being affected by it, although they have no choice but to embrace it, wouldn't you say?
Yeah, definitely, Mike. And yeah, thank you. And hello to everybody today. For me, competition is something that we need in business, but it's something that within people, that if it's in danger, or if it's engendering fear of some sort, or it's engendering sort of negativity within that relationship within the business, then I find that to be very counterproductive towards how the business performs and how the people perform. So to me, competition, in terms of how we navigate that, creativity, to me, again, I'm a people person. I work with people, I deal with people, I'm a coach. And therefore, for me, the hub of all people is our creativity. That's what makes us tick. It's who we are. And so rather than tapping into, okay, how can we be competitive and win, as opposed to, well, actually, how can I create a solution that, yes, we're going to win, but in winning, we're not going to affect adversely anybody else within the chain of events that are happening. So it's encouraging people to show up truthfully and honestly as themselves, and being honest about where they are in business. And for me, that from the top down will engender just such loyalty and trust within the business to increase the performance, to increase the productivity. And again, you know, as Damien was saying, you know, trust is one of the big things that people are saying in the survey that is very important within the business. And I don't believe that trust will come on the back of competition that is unhealthy in some way. It can only come on the back of either creativity from people opening up new opportunities, new avenues, or it can come through healthy competition, as in it's the right move for the businesses to do it. But it kind of needs to be the right thing. And I know when I start to talk about this, I can sound a little bit, maybe a bit spiritual with it in terms of how I see it in the world. But we're human beings, and a business isn't a business. A business is a bunch of human beings doing a job to create something for people to have financial services, mortgages, or whatever. And it's those people that we need to make sure are showing up each day in a place where they are trusting of each other, happy to do the work, and again, just engendering that trust and that relationship between the people within the business. It goes into partnership as well, in terms of trusting other people within the partnership, trusting people to do things. So I think healthy competition kind of lies within the personal. And that goes right back to the first topic of trust. So when we're trusting ourselves that we're doing the right thing, then that will cascade all through the business to be doing the right thing.
Well, Lindsay, that's really, really interesting also, frankly.
So I don't know what you hear in that.
No, a lot of things, actually. I'm sure all of us do. And you've covered a lot of ground there. And in essence, you've tied together quite neatly those three areas, really: trust, partnership, and competition. Anastasia, you, I believe, I know you have a case study that talks to all of this really, which was kind of fascinating. So perhaps your thoughts on this particular topic of competition and wrapping in with that trust and partnership.
Absolutely. I think I have two topics I wanted to briefly share and talk about. One of the things I feel about competition is that it's not about healthy competition. It's the fact that you have a competition. That's what's healthy. That's normal. And the point is to understand your competition, know what they do, how they do it, and really be part of the co-creation of ideas. And it's not a competition, it's really about being in collaboration with organizations and knowing what they do well and knowing where you can come in and do better to complement those other offerings. But I also wanted to draw upon what Victoria was talking about, ecosystems and creating safe environments, be it sandboxes, be it accelerator programs, be it just generally ecosystems for organizations and different skill sets to come together and in that safe environment to look at a problem and look at how everyone can come together and create a creative solution to that problem. And by that, I find that over the time, we are starting to really harmonize or level set the playing field between the challengers, the new kids on the block, the new organizations, the new ideas, with more established service and product providers who are currently obviously are defending and really trying to make sure they protect their business as well.
Fascinating. There's a point made here, and apologies to attendees, we won't get to all the questions. We've got some great ones coming in. But Paul Tester, you made an interesting point here around healthy competition, almost driving adaptability. And I'm sort of paraphrasing what you have in your comment. And you make the point that the need doesn't always have to be the same as the want, because sometimes, those aren't necessarily clear at the start, but the underlying competition drives the need to discover it, and therefore creates the adaptability in the ecosystem itself around services. Does anybody in the panel have a view on that particular topic in terms of just the adaptability element that competition drives?
I think it drives, I think it's a really important point, because as I reflect on one of the benefits that the fintechs and some of the regtechs have is that they bring people with maybe different skills looking at a problem in a very different way. And one of the things that I certainly judge when I deal with fintechs and regtechs is particularly what are they bringing that's adaptable to my organization that I don't have? Where are those insights coming from? And to the point, what is the customer solution that they believe they have a unique view on doing? And I think when you bring those things together, to Paul's point, it then starts to drive a change, because the organization you're trying to interact with gets a better view of the world that you want to create. And that adaptability helps us to understand, well, how would I work with you? What does that look like? And I think that, in terms of bringing that healthy competition, bringing us to understand, you can actually move the dial for me in this area. You can actually challenge my own thinking. You're bringing a different group of people into the room than I have within my organization. I think it's that, Mike, that starts to tell the difference between the different businesses, because you get someone with a life experience driving and a way of making your company much more adaptable to where it needs to get to. And I think that connection is almost, for me, the most vital one between small businesses like myself, challengers like myself, trying to work more closely with people who've got an idea of something they want to change. And I can help them as much as they can help me.
And in a sense, it's a kind of a follow-up to that. The concept of an open source solution then really comes to play here, doesn't it? Whether one, I'm just mentioning this as an example. Recently, Goldman Sachs were launching, themselves as a payments player out in the financial services industry, and they spoke to the concept of payments as a service relative to transactional services or treasury services driven through the corporate lens. And that's an example of something happening in the US, perhaps, but open source open source solutions generally are really in that realm of healthy competition and driving the industry into new areas. Again, not necessarily that the large bank in question wanted it to happen, but it's happening anyway. And now they need to adapt to that particular aspect of that. Does anybody have a view on that particular challenge that large banks are facing?
Yeah, I think so. This ties in with Paul's comments and Damien's comments there. For my world, we're talking about product market fit. So the sort of needs and the wants. And actually, I would say that most founders come from having experienced the pain, and so they've got to want, and then they've got to need, because they need to do something and they want to find a better way, and they create something to try and make a better way to do it. Obviously, that's quite a point solution. And then the challenge when you start talking to particularly a larger enterprise is how do you then see how that fits within the broader needs and wants. And open source is an interesting one. A lot of providers use a lot of open source software in their products, software libraries, Ruby gems, etc., all this sort of thing. So I do think that it does tend to start from a need that someone identifies, and they go and create something to solve that, and they come to talk to the enterprise. And I think this is also where the size of the financial services entity matters, because smaller financial services entities, I think, are more open to have more solutions and manage that. And I think larger enterprises in financial services tend to want, they've got a very structured sausage machine of a procurement process that things have to fit through. And I think that's where a challenge comes from.
Indeed, fascinating. And look, this topic generally, we could go on, and it's one of those things, but no doubt incite a lot more debate and discussion if we were in a pub having a pint in, we're pre-COVID times, who knows. But we're going to move now to the second section of today's panel, which is
Actually, Mike, can I just butt in, because there's one point around that to finish off that section, because last time we talked about a concept around the maturity of the market, and product market fit was brought in, and then we said about actually purpose market fit needs to start playing a role, because the industry is more fragmented now than ever, and you've got all the incumbent firms and then the fintechs, and who knows where that's going to settle, but there does need to be that diversity in the ecosystem, but it's very fragmented and noisy and confusing, and there's a lack of a common language to help in that. That's something else that we talked about. So I think and that's why all these topics are really interesting. So we need better trust models, we need better partnerships to help everyone find their place, and so that everything works together, especially for the end consumer. So I like what Damien said, and I think it's incumbent on us all, whether we're a provider or a receiver, to make sure that we really understand our position and focus on purpose rather than just tech for tech's sake, for example. So I think that's the thing. There are so many solutions out there now, but unless you're really clear about how it's helping a bank or a firm and the end consumer, then I think that's what will help drive things forward.
Absolutely, that clarity is key. Without purpose, it's hard to see, where that. Well, you can certainly see where things can go wrong without that. So all that takes you've mentioned, and really, when we speak here of diversity and inclusion, we're kind of talking about the entire supply chain in financial services. And the diversity that is now possible, as it were, within the fact that the market is indeed fragmented. It was described some time ago to me that what's really happened is that there's a series of utility layers being created on top of existing piping, existing financial services plumbing, if you will. And that's really fascinating. And what's happening in Europe around open source and even the general move in the US where I'm based is interesting as well. So one starts to see that, and ultimately, I think the questions we need to ask ourselves there are pretty key. So let's start with the panel. This is really to the panel, and Damien, I know you have a view on this, certainly, as do you, Victoria, and Sarah, you mentioned it already. What else needs to happen in this particular space to really make the system healthier? And just generally, what do you feel is there? And specifically, if you could touch on the data aspect of things, because we all know, I think, in business that what you measure is often what you get. But collating data that's accurate, that's meaningful, and then how does one come across it? How is it published? Could we speak to the broader need for diversity and then think specifically in the data section as well?
So I'll if you don't mind, I'll start us off. So I think, you know, COVID-19 and everybody being maybe at home more has highlighted some of the challenges this year. So if you look at the situation in America, which has kicked off the focus around Black Lives Matter with the death of George Floyd, I think what started to happen from that day onwards was people started to ask themselves the question around, you know, in reality, how do we as a world, when we're all suffering together, start to understand the needs and challenges of all different sections of the community? And I think that's something that is going to stay with us, I think, post-COVID. Because the reality is, if you take financial services as a sector, the representation both of females at senior positions and members of ethnic minorities in those positions have just not been seen. You know, I look around the UK, I've worked for 30 years. I've never worked for a boss that's Black. I've known some people who've worked in financial services who said to me, I have never worked with another Black colleague in 30 years. And I think when you start to look at the population and what's happening around the world, I think in all countries and all genres, wherever there's diverse talent, we talk about how do we include that? How do we start to think about encouraging that to drive forward solutions? I think diversity is going to remain a challenge and an opportunity for businesses. And if people want to see the power of data in that, if I am a politician in the United States of America today, and I don't recognize the power of the Black vote, I will never recognize it, because the data now tells me that Biden won because in the inner cities where there are more Black people, he got those votes. So as a Republican, and you're plotting your way to 270 electoral votes, you can no longer forget about that segment. You can no longer say, well, that segment doesn't matter. Because that segment, through the data that you've seen, shows you that without it, you're going to be unsuccessful. And I think to that measure, as people start to recognize the power behind diversity, how it shapes consumerism, how people start to think about their expressing their needs and wants through the power of their vote or their cash, businesses are going to find those opportunities. And those opportunities are going to become more abundant. And the data is driving the solutions. And therefore, I think diversity in all aspects, be it cognitive diversity, be it racial diversity, be it gender diversity, is now here for this world to deal with from now on. How we deal with it will be interesting, but actually it's a place where I think the world is now looking in a very different way. And data is significant towards driving that forward. And actually in firms, when firms really start to talk to people about what they want to use their data for and how people can see that that data is driving real solutions for them and the people that look like them and seem like them, then I think you'll get more buy-in to people being freer to use their data. Because at the moment, people are afraid. What do you want this for? How is this going to affect me? If people start to see the benefits of that, Mike, I think the world's changing and it can't go back.
Yeah, you touch on something fascinating there around the underlying fear of data usage and generally how that also might then skew the data quality in and of itself, frankly. Victoria, that's fascinating really, because the challenge in essence is that if we accept for a second that the diversity question is, is out in the open for very healthy reasons, and there's lots of examples of why that is so, then the aspect of how society, the public, clients, customers, define those you will, can judge the underlying company through the lens of data on this particular topic. I mean, what are the thoughts you have there around how that might be A, collated and B, published so that there's meaningful use for it?
I think you guys are more advanced than where we are over here in this side of the world. I'm a data and I'm a diversity and inclusion champion over here. And we are working like we're building an ecosystem on diversity and inclusion and sharing, best practices amongst firms locally. That's the only way we're able to start collecting the data. So sharing of information of like what we do in terms of diversity, what we do in terms of how to improve the platform altogether. We are not even yet at the infancy. We are still at the procreation process, I would say. So for us, it's really a steep hill at the moment. And we are still at the precipice of gathering that data that we need to be able to develop this whole thinking. So for here, diversity is not just about gender or ethnicity. I mean, we're multicultural and there's so many people in Singapore, for example. It's really more about mindset, making sure the biases are not there, especially the unconscious bias, which is a very important facet, especially if you're building a team for your company. So if you ask me about the data, we don't have enough data to start with. We are still gathering that data. So if you compare it to the United States or even the UK, actually we look towards you guys to find the best examples you have on what are you doing and what are you developing with that data to improve your diversity.
Do you feel, does the panel feel that there's a role for the regulator? And I hesitate to use the word mandate because it's one of those things which certainly here in the US, given the current debate around personal rights, etc., is a tough discussion to have. But what does the panel feel around the role of the regulator actually mandating the publication of a set of diversity and inclusion data within the firm's records, much like you might do with the executive compensation? What is the general thought here?
I think, yeah, maybe not mandating, but there's certainly things that they could do to encourage and facilitate the collation and access to data and getting people to collaborate. I mean, going back to the subject of fintech and regtech, there's a lot of focus on what the regulator could do, should do, and they have done a lot recently. I feel very much it's now the part of all of us in whatever aspects of the ecosystem we are to join up that and help take it further, because it can't just be the regulator. And it's the same with diversity and inclusion data. So yes, they have a role to play, but I sort of feel if they mandate it, then it just becomes another regulation, and then there's a tendency to do tick box. Whereas if it's more about encouraging and facilitating, then there'll be better results.
So there could be almost an aspect of recognition within the industry that somebody is indeed publishing it, and how could they be recognized rather than mandated to do so?
I agree with that. Mike, just another comment to build on what Sarah just said. So, what's the purpose of all this? Why are we talking about diversity and inclusion? Well, going back to the point that Mike made at the beginning of the session, to unlearn old ways and embrace new ways, and this is about embracing the world, embracing diverse thoughts, diverse, people, diverse issues, to bring better solutions to the world, to bring better solutions to business, to society, whatever level we're in, to fintech, to regtech, to the financial services, to achieve more, and so different thoughts and different inputs are key. So, and diversity, as Damien said, covers such a wide area. It's not just the minorities, etc. And how do the regulators use the information? How do they inspire? How do they take the statistics, take the data and do something beneficial with it? I've got some stats here, for example, that show there's something around so yesterday I saw this quote. At the same time, however, so they're talking about women accounted for 51% of appointments in the UK boards. This is not just for financial services, this is just generally UK boards in the past financial year, as businesses tried to address the gender imbalance amongst senior leadership teams. So that for me is it's moved massively, 51%. I'm surprised at that. And then they went on to say, at the same time, however, the number of BAME, so, the minorities Asian and minorities directors has stayed the same in the 150 biggest listed companies, roughly 8%, with the proportion of BAME directors being appointed in the past financial year doubling where it was 5 years ago, but still remaining at a low 14% of appointments. So there you go, tiny. So what influence do they, are they able to have? We've got to increase that number. So I suppose the regulators have to kind of start influencing where they believe it'll help the change, start influencing and taking the data and making, encouraging other people to make changes.
Mike, it's quite interesting because the regulator sees all the appointments. So the new regulator of the FCA has made it very clear to banks that if the data coming across his desk doesn't change, he may have to do something about it. So the regulator is uniquely interested, but to Lucy's point, it's for firms, it's for reg tech firms, it's for everybody on the call to seek out the differences. If we start at that level, and in all the small firms, all the other firms, you start thinking about, well, when I pull a consumer panel together in the UK, have I got good representation on that panel? Do I understand the needs of different segments within those different groups? What does that look like? So, for example, in my business, if I'm thinking about doing mortgages for customers who have less than perfect credit in the world that I live in, have I got the people who just migrated from Spain to the UK who might be doctors, lawyers, but because they don't work here, they don't get opportunity? Do I have people in the different communities? How do I understand that data? And therefore, I think as you start to get to that, you find talent seeping through in all areas. Because it's okay saying you want to put more CEOs in, but you've got to start putting some people in at the bottom of the foundation first and allowing them to find paths through the organization to become more senior. You're not going to miracle these people up into senior positions if you don't start working on the pipeline. And I think everybody has a part to play in terms of how do we start to make that representation more equal? How do we start to think about in our firms and our hiring practices? How do we encourage people to do that? Because that will start to put this into a long-term solution for people to get through. And I think that is the challenge of the financial services industry, not just the banks, but everybody who plays within it.
Yeah.
If I could, sorry, you go ahead.
Robert, I was actually about to ask you what you thought of this, because ultimately, I think that's a critical element of it. It's one thing to have data that shows I have, N number of this and Y number of that. It's another thing entirely to have an ecosystem or a culture within the firm that allows the path, as it were, to the top to really match the ambition. I mean, because clearly talent and creativity are evenly distributed, but opportunity is not. So ultimately, this is the question I wanted to ask you to follow up on.
Yeah, so my experience has been in the field of law firms, and law firms are really, they've changed a lot over the last 20 years. But when I was coming through in the mid-90s, early 90s from law school, half of all law school graduates were female, and hardly any partners at city firms. I mean, you were, low single-digit percentages were females and partners. And so, what happened? Why were women leaving the law between entering as trainees, getting qualified, and then going up through? And I think a large part, I think I totally agree. Well, I agree with a lot of what Damien says and Sarah as well. But I do think the regulator can set targets for a period of time ahead to make the people who are able to affect that change from the recruitment and the promotions know that they need to be at a particular place at a particular time. And so they can start helping build that pipeline and retaining the pipeline of people, because there's enough demand to come in. And that's partly looking at the culture, who people retain, how they reward people, what the culture. I was at a startup where there was a very boozy culture. Everything was about alcohol. Like, we've won a new big deal, let's all go and get drunk at the pub. And it was like, well, some people just don't drink for whatever reason, for multitudes of reasons. And they felt very excluded in that culture. I mean, I'm just taking one separate example, but so I do think the top-down culture can really be affected from the top down. It takes time. And I think from the regulator saying, by this time, I want you to have X. I think that gives a real boot up the backside to the people in charge to say, right, I need to start really looking at that pipeline, building that pipeline. And my wife's a tutor at a university. They do a lot of outreach to try and change the pipeline of people applying to that university. And it's taken decades to do that. And it's not just about the application, it's once they're into the university. And so the analogy is, once people are in a firm, how do you make sure they can go up? So I think that's the key bit for me.
Yeah. Also, I think size diversity, I don't know if that's actually a term, but I feel very strongly about that in terms of big and small. And one of the panelists that was due to be here today, Mark from MasterCard, he's director of sourcing, supply chain, and he's very passionate about this. His view is that it's incumbent on larger firms to help smaller firms through. And I think, at the moment, especially with COVID, there's huge issues for everyone. Jobs are either going or they're moving around. But I think we need to be cognizant as a society and an ecosystem, to make sure that there is that diversity. So yeah, diversity is a huge topic. We need to get broader about it, more diverse about it, to make a difference.
Very aware we're coming towards the end now. We have 4 minutes left, and I think this is fascinating because it does take us to broader thought around competition drives change. It's enforcing partnerships in a world where change is happening more quickly than the larger legacy entities can cope with, and they lack the agility perhaps to do that. And that takes us into the conversation around how that will work. And then at the other end of it, you have the trust question, which is taking us a little bit again to the D&I question around diversity, because ultimately we're in a place now where I think most people are going to trust or be able to work with firms, or wish to work with firms that reflect society more than they have perhaps in the past. And I think that was one of the points you were making, Damien. So it's a fascinating area, and I think Sarah, we are going to come back to this particular topic in the future, aren't we? Do you want to speak to that before we go?
Yeah, it's really to go more in depth, because it was interesting talking about it today in the context of the ecosystem topics, but it is such a huge area. And I think the temptation is to think that we're doing okay because we've got D&I champions and there's lots of programs in place. But, certainly Black Lives Matter and, so many other things this year have brought things to the fore. And if we're going to get a healthier ecosystem, we need to find practical ways of talking about it more and working together more, to bring about positive change. So that's the topic for next session.
Fantastic. So we have 2 minutes left. Does anybody on the panel have a closing thought they would like to share with the attendees, or indeed the rest of us? For a group that speaks so much, that's a new.
Look, I'll say something, Mike. I'm going to actually disagree a little bit with Sarah there and some of the panelists. I've been in the industry for 30 years. And if I think back to what financial services was like in the mid-80s, where it was mainly made up of barrow boys and ex-military, it was a horrendous environment to work in. And we've come a hell of a long way to have an open discussion like we are today. But to Victoria's point, it's really hard to create that global, and I won't get this word right, hegemony, where we've all got exactly the same values. We're never going to get to that point. So one of the key points with D&I is to understand the differences and be aware that this stuff's going to take time. One of the most encouraging things I saw this week around this topic, Aberdeen Standard are launching a fund of hedge funds which deliberately targets funds managed by women, because they worked out that the average return for those funds is 6.9% compared with the composite, which is 1.1%. So back to the point around data, if you've got the data, which I think the industry is now beginning to gather, you can start making really informed decisions as to where D&I really makes sense.
Absolutely. What a great way to finish this off. Thank you, Trevor. That's really, really impactful. So everybody, thank you. We're at 10 o'clock now. Well, 10 o'clock in New York, certainly my time, but what does that make it in the UK? And indeed Singapore. So diversity even in time. But thanks everybody for attending, and thank you for the questions. Apologies for those we didn't answer. And thanks to the panelists for your thoughts and opinions. It was really interesting to hear them all.
And thanks, Mike.
Yeah, thanks,
Thank
Mark.
you, everyone. Bye.
Thank you, Mike.
Bye.
Bye.